Welcome to Token 24/9 here in Dubai. I'm joined by Arthur Hayes, the CIO of Maelstrom. Arthur, welcome to Crypto Weekly on CNBC Arabia.
Thanks for having me.
So Arthur, there's various things I want to discuss with you, but first of all, let's discuss markets. What's your view on the outlook now? When we look at for the rest of the year when it comes to crypto markets, with what the Fed may do, what we're seeing on M2 and all the broader activity on potential rates as well, how do you see crypto markets change over the next couple of months?
I think we reached the bottom on April 9th of earlier this month when Trump and his team pivoted from this maximalist tariff position. I think that a lot of people are hating this rally. They're not really participating because they're asking the question, when is the Fed going to cut? When are they going to start quantitative easing? And I think they're making the same mistake in April that they made in third quarter of 2022, where people were like, oh, the bond market's melting down, the stock market's falling, Bitcoin's falling as well. The Fed is on this inflation fighting mandate. The rest of the central banks around the world are hiking rates. Oh, I shouldn't be owning risk assets. And at that time, Janet Yellen came in and she did what we now call the activist Treasury issuance policy, where she issued more Treasury bills and Treasury bonds, and the issuance of these bills at a marginally higher rate than what the reverse repo program was paying took $2.5 trillion of sterilized money on the Fed's balance sheet and put that into the financial system. And since, I think I put a chart up when I was on the main stage of December 1st, 2022 until early 2025, Bitcoin went up 6x, stock market doubled, gold doubled, while the reverse repo program basically shed $2 to $2.5 trillion, right? So if you focus on the Fed, which again, I understand, we were trained 2008 to 2019, the Fed prints every week, we buy the bonds, then the S&P and the NASDAQ rally. But they can't do that anymore. People understand globally that quantitative easing means inflation. And politicians cannot win re-elections when they're seen to be inflating the way the money supply, because it impacts the whole population and they lose elections. So when you want to provide monetary easing, when you can't do the obvious thing, which is the Fed, quantitative easing, or central bank quantitative easing, the finance ministries, the Treasury departments, they take over and they tinker around the edges and find these pockets of sterilized money and bring them into the financial system to re-leverage them. So again, don't get caught up in the Fed has to print. The Fed has to start quantitative easing. It's all about the Treasury now. It's all about the finance ministries and what they're going to do to make sure that their bond markets are solvent nominally in fiat currency terms. In real terms, they're going to deflate versus Bitcoin, versus gold, versus certain types of stocks. And so don't be too scared. It's time to go long.
And I think when it's time to go long, where do you think will have the most activity? You think a lot of this activity will come into Bitcoin or also on altcoins as well?
So I think initially it'll be Bitcoin. That's what people understand. If you're an institutional investor, you're buying the BlackRock or Fidelity ETFs, you're not buying altcoins. That'll come later when the wealth effect takes over. So first we have Bitcoin. Maybe Bitcoin breaks 110,000, goes decisively toward 150 or 200,000. And then the altcoins can rally because people are feeling wealthy. They're going to go back to a certain project they like or whatever the new narrative is. And that's when altcoin season really begins in earnest.
So you're quite bullish that Bitcoin can hit the all-time high even this year in 2000.
I think we're going to be close to 200,000 by third quarter. We'll have some chop after that. But again, I think people are not understanding the motivation of policymakers to make sure that volatility reduces in the bond market. They can't have what happened in the first few weeks of April happen again. We saw what happened immediately as volatility spiked. The authorities stepped in and they changed action.
So you've been in crypto for a long time. Back in the day, having Bitcoin ETFs was just a dream, and obviously now it's there. A lot of this new money coming into Bitcoin. I know there's a lot of talk about institutional investors coming in, retail either buying spot on exchanges, going via the ETF, or even going into crypto derivatives. Where do you think, with this bull market that may come, where do you think these inflows may come from these different instruments that we made?
I mean, the ETF is the easiest. It's a stock equity. It's in the United States. People's risk committees are allowed to buy it. If you're a retail investor, you can buy it in your retirement fund. So it's just the easiest thing. And again, I don't think most people want financial independence. They want to buy something that makes them more fiat currency. And so that's why the ETF is good. You don't have to understand private keys. You don't have to store your Bitcoin. All these things you have to worry about when you actually use the technology for how it's supposed to be used. It's just a financial product. You can go buy it.
You at BitMEX and your team invented the perpetual swap, the perps, obviously not the most traded instrument in crypto. Into 2006, I believe, 2016, when you guys invented that instrument. Back in the day when you guys came out with the perps and you see where it is now, is it what you expected? Do you always have believed that it was going to become so popular? And where do you see the future of crypto derivatives more generally in the broader ecosystem?
So yeah, I don't really, at the time we created it to solve a problem. It was easier for us to concentrate liquidity in one product. We thought the clients would understand it better than having a bunch of different fixed expiry date futures contracts. And initially people hated it. We got a lot of flack from customers saying, we don't want these perps. We want the futures contracts, go back to that. But it solved some problems for us operationally. So we stuck with it. And over time, obviously, it was a success it was. We never thought it would be this big, this quickly. And then going forward, now that's pretty ubiquitous that there are perps. I was talking to someone with the CME. They're trying to do some sort of perp-like thing in the US. You see CFTC, the regulators asking comments on let's have perps in the US. So that's great, financial innovation. But what's next? What are we going to do next in the derivative space? And I think the next thing is going to be decentralized exchanges and how they're going to grow to take market share from the centralized exchanges and how they're going to change trading for individual people. I mean, there's going to be two, I think, bifurcated ecosystems of people who can trade on a centralized exchange and those where the decentralized exchange makes sense. And ultimately, the decentralized exchange is where we want to go as an ecosystem because that really fits with the ethos of Bitcoin.
I want to just bring it back to the markets and the macro. I mean, what was interesting in April was that there was the coupling in a way of Bitcoin and other risk-on assets. Is this something you expected? And do you think this is actually a big milestone in a way for Bitcoin in its evolution that we've had in the last 15, 16 years?
I mean, I think it's coupled because now we have an ETF. And so if you're a risk allocator, right, and you've got a margin call, you sell what you can. And Bitcoin's liquid, you can sell the ETF, raise cash to fund other illiquid positions. And so as more and more institutional investors own these financial products, they become tied to different variations in how they need to post margin in certain places to a certain extent. And so I think we saw before Trump invested and pivoted, Bitcoin was rallying as the bond market was melting down in the United States, whereas stocks were falling. So I think Bitcoin is regaining this safe haven status of, okay, well, when volatility rises, Bitcoin does well versus other assets which fall in price as carry trades get unwound.
So let's say a hypothetical question. Trump Besson call you in as your crypto advisor. And knowing everything we just discussed on the macro environment and what the outlook of Bitcoin may be, what's the one piece of advice you give them?
I think that if the United States wants to be the home of crypto, it's a big assumption, they should do something like they did in 1996 with the Communications Act for Big Tech, which basically said, hey, I'm a big tech company and there's things that happen on my platform. And I'm not going to be held responsible by the authorities for what happens on the platform. I'm just going to be allowed to permissionlessly innovate. So if they're really serious about creating sort of a made in America crypto, well, then make crypto developers and entrepreneurs feel safe being in America by basically saying there are no rules on how you permissionlessly innovate as long as you're not stealing people's money and doing those sorts of things. Launch an exchange, launch a stable coin, build some decentralized technology. We're here. We want freedom. We want these ideals. Come build this here. And then you're going to have the smartest and the wealthiest people in the world move over to America to build these products and feel safe, basically bringing, crypto to billions of people, but living in America, paying taxes, buying houses, going to nice restaurants, all those sorts of things that you see when you go to like Palo Alto and San Francisco. Same playbook in 1996, they can run it again. But unfortunately, I think politics dictates that a lot of times you build these moats around businesses where XYZ CEO goes to speak to Trump or David Sachs and say, hey, I think you should write the bill this way so that my company does better than their company. But that's not really a long-term strategy because, in 2028, we can have a whole different set of characters and they can have a whole different set of priorities. Unless you've done the hard work to go and put in actual regulation that protects the innovation capacity of America, then all you're going to get is a ping pong back and forth, positive and negative.
Let's see if the ping pong goes on, and let's see if your outlook of crypto markets turns out the way it is. This was Arthur Hayes, the CIO of Maelstrom. Arthur, thanks for being with us today on CNBC.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.